Alrighty, so I got one trade to go over this morning. So let's break it down. Let's get into it. That trade is GBP So you can see this morning in my free Discord chat. Link in the video description if you want to join it. I'll post my charts every single day in this chat room. I have educational material in this chat room. Everything you need in regards to technical analysis is in this chat room. Everything you need, right? So here is the chart that I posted this morning. You see, okay, I just plugged 3 charts for you. One is the daily, one is the 4 hour, and one is the 1 hour. On the daily chart for GBP we pulled back into a discount market, tested a higher time frame. That's what HTF stands for, higher time frame level, aka our daily bullish order block, right? So you can see we pulled back right here. Look at my cursor real quick. So we pulled back down below 50% equilibrium of that price range. And we tested this bullish order block right here. I'll go to my charts in a second as well and break it down, but that's our bullish order block. That's our higher time frame daily level that we bounced off of this morning, okay? And what do I always tell you guys? When you have a higher time frame level, your odds of success, they go up dramatically, okay? So we had a daily bullish order block here. And I said, and boom, we got a reaction off that level. On the 4 hour, you can see we had a shift in market structure. That's what MS stands for, market structure, and also have a bullish order block on the 4 hour chart, right? So this is the 4 hour. See that? I indicated right here. If you look at that upper blue line, I indicated right there that that is your 4 hour bearish, or not bearish, your 4 hour bullish order block. And then once we broke this high right here, what is that? That is a swing high level. So we broke that swing high level. What's that? That's what we would call a shift in market structure. And that shift in market structure, it occurred after what? After we tested a higher time frame level of support, aka our daily bullish order block that we were just going over. So we're bouncing off of a larger time frame level. Boom. We have a shift in market structure. Boom. We have a 4 hour order block now. Boom. Because remember, price is what? Price is fractal. And a lot of times what you'll see on the higher time frames, you'll see the same pattern play out on your lower time frame. So we have a 4 hour bullish order block right here. That was a point of interest, right? So, and I'll say that, and lastly on the 1 hour chart, we have our fair value gap confirmations. That's what FVG stands for, fair value gap. And once this 1 hour candle closes, coming into 7 o'clock a.m. Eastern time, because that's our New York kill zone, starting at 7 o'clock a.m. Eastern time. It's not a fair value gap yet, I said, but it will be once this closes, because I posted it I posted it right before 7 o'clock. So now it's a beautiful looking setup, because it definitely is. It's a beautiful A+ setup. So there's that fair value gap that I noted on the 1 hour chart. Look at my cursor again. See how the top of the first, the bottom of the third, they are not touching. There's nothing but candle in there, right? That's a fair value gap. That fair value gap was created right after taking liquidity, and then it was followed by a shift in market structure. And that was the result. Yep, that's what we're doing right now. And let's start from scratch. So we're going to start on the daily chart. So on the daily chart, what are we looking at right here? So the current market structure is 100% bullish. 100% bullish market structure on this daily time frame, our higher time frame chart. And just by trading with the overall time, or the overall market structure on your larger time frame, our daily chart, just by doing that one thing alone, that one thing alone, you put the odds in, your odds of success go up dramatically just by having that one thing alone, your daily chart, trading with that larger time frame tide, that larger time frame direction, right? So, and also we had something else happen here, or to make it even better, was the fact that we had this higher time frame level. See right here, if you look at my cursor, that is what we would call a daily bullish order block. So you can see price, it traded down into a discount market. Let's take our Fibonacci from that low to that high. Let's plot it on there. See how it traded below 50% equilibrium with that price range? That means we're in a discount market. And we tested a key higher time frame level in a discount market. And we got a reaction off that level, right? So now let's go down to a 4 hour chart. Oh, wrong one. Let's go down to a 4 hour chart. And here is that 4 hour bullish order block that I noted for you just a second ago when we were looking in the Discord chat. Let's note that as well. Remember, price is fractal, right? We had that daily one. Now we got this 4 hour one. And once we broke this high right here, that was our shift in market structure. We broke this short-term high right here, okay? And it happened during London session. That's worth noting as well. And as I've said in several videos, when you have the influence of London backing you, that's much higher probability as well when you're traded in the direction of the London trend, right? So we had that shift in market structure occur during London session. We had a bullish London session. So we have several things lining up here, right? We have the overall larger time frame market structure. We're trading with that. Okay. We have a larger time frame daily level of support. We have that. We have a shift in market structure that occurred during a key time being London session. We have the influence of that backing us. We have that. And we have our fair value gap confirmation that was created as well during London session. So if we take, let's mark that real quick. So we're going to take this high to that low, and you can see that there's nothing but candle in there. See how those two candles did not touch? Here, let me draw it on a little bit better for you. And boom, right there. See that? See how the top of this candle and the bottom of that candle do not touch? There's nothing but body in there. That means it is an imbalance. That's a fair value gap. And that fair value gap was created right after taking this sell side liquidity and trading down into a higher time frame level. After it did so, boom, you get a nice big explosive move to the upside, cracking this high right here, which is our shift in market structure, fair value gap confirmation. And then what does it do? Do we want to buy it as it pops up here? No, we don't want to do that, right? We're not breakout traders, or at least I'm not. I want to get the best entry possible, okay? And even though it's bullish, when price came up right here and it took out this high right here, it was in what? I want you to answer among yourselves real quick. Once it took out this high right here, it was in what? It was in a premium marketplace. Do we want to be buying in a premium marketplace? No, right? We want this to pull back into a discount. Where's the discount? Remember what we just did on the daily chart? We're going to take this low, which is from London session, which is low of day, and we're going to take the high of that price swing, right? We're going to measure this price range. This is what we would call a price range. Then what did price do this morning? It traded down below 50% equilibrium. As soon as you trade down below 50% equilibrium, you are now in a discount marketplace. You are now cheap. That's what discount means. Discount means cheap. And you even gave key Fibonacci retracement, which is 61%, right? So we had several things in here. And also, one more thing. We had the 50 institutional price level inside, right smack inside that fair value gap as well. Because I mean, literally everything you could want on a play, we had it on this. I mean, there's not any missing link on this play. This is what you call an A+ setup. Okay. So that is exactly. So we ended up getting key Fibonacci. We had 10 o'clock a.m. high impact news. So I sat out for that. I let that play out, let it do what it wanted to do. And then after the news was done, everything settled down. We took out these sell stops. That's when I entered. I got in long. Where was my stop at? Where do you think my stop was at on this play? Remember, where we put our stop, it needs to be aligned with the market structure. What do I mean by that? We want to play the market structure. So my stop should be placed at a point that when wrong, it would invalidate the market structure. So my stop was below low of day because that was the low of this fair value gap. That was the low of this imbalance. If price was to trade down here and break low of day, that would invalidate that market structure. That means I would be wrong. It doesn't really mean that I'm wrong about the direction, but it means I'm wrong about the timing, okay? But it respected that area. Okay, we had this last move down right here just to take these sell stops. Gave us 61%. And boom, we get a nice move up higher. Where did it end up headed? It took out these buy stops. After it ran, it broke above high of day. That's where I locked in my gains and I took profits. Okay, because remember, above highs, we have what? We have buy stops. We have buy side liquidity. So I knew price wanted to tag that level. Okay, so yep, that was the play. Again, if you want to join my Discord chat, there will be a link to that in the video description. Like the video, leave a like, subscribe to the channel. I'll catch you later.